lots of FX action really across the board. But when you get down to it, how much is going to depend on the direction for the greenback next? Do you see more consolidation? Do you see a further break lower?
Well, our view is that the dollar will break lower over the coming months, but that's going to be driven by data releases. We have the Fed this week, which we think not only they will hike by 25 basis points, but they will also retain that very hawkish message that there's still quite a lot of work to do because inflation remains elevated. But when we look at the inflation dynamics and we look at the leading indicators for inflation, we're quite assured that, or we have been gaining this confidence that inflation will come down quite significantly over coming quarters in the US. And that in itself will encourage the market to believe that the Fed not only is done, but will be contemplating rate cuts towards the turn of the year. And that will be a significant downturn for the US dollar.
Is the euro strength story overdone as well? The nominal effective exchange rate sees it the most expensive ever.
Yeah, the euro one is a really interesting one because at the moment, the economic data releases, particularly when you look at Germany, is not very supportive from a growth perspective, particularly when you see that the resilience of the US economy. Yet the euro has been performing because of those expectations that the ECB still has a little bit more work to do. And this week, of course, that 25 basis point hike is well priced. But the messaging after that hike will be super important. If they remain very hawkish, the euro can probably sustain this support and break above 112. But if they sound a little bit doubtful about further hikes, particularly in September, then I think the euro will struggle to break higher.
Let's talk a little bit about the Japanese yen because it has broken higher, but really not enough. We're now continuing to see the weakness again at around that 142 level. And with the BOJ potentially not doing much, how much weaker against the US dollar and other currencies could it go?
Well, I think that 145 level remains the big test. If it breaks higher, that's when you get them off, probably talking about intervention. We're still a long way from there, so it leaves open room for the yen to weaken this week. Our sense is that the BOJ will be important. You noted how all these reports last week suggesting that the BOJ is likely to stand pat. But what will be important is, they're going to be releasing new inflation numbers, and those inflation numbers are going to be upgraded. The core core reading remains at 4.2%, so very elevated. And if they show that they don't decline towards the 2% this year and potentially next year, the BOJ is going to have to justify those numbers. And that's going to leave the door open for the potential for YCC to potentially be, tweaked maybe in September. So I think that we should expect some volatility on Friday for the yen.
Of course, much of the movement in currencies has been those rate differentials, right? And when we're talking about the BOJ, we can't really forget about the PBOC either, because they seem to be going in a completely different direction as the rest of the advanced Western economies. I mentioned earlier how the Aussie and the Kiwi dollar have been dragged by the weight on the offshore yuan as well. What can we expect there?
Quite right. The Aussie and the Kiwi very, very risk and pro-growth sensitive currencies. And at the moment, as you say, equity markets have been performing. So that's been good news for the Aussie and the Kiwi. The rates differentials are now, particularly for the Aussie, starting to help a little bit as the market sees the RBA holding the cash rate for longer than the Fed will do. But it's China, the one that is actually impeding the Aussie and the Kiwi performing. And much will depend on what those stimulatory measures announcements that are expected later in the week, whether they disappoint or whether they're not. CNY, of course, remains under a little bit of pressure. And then we basically need to see the government committing to some real fiscal spending. At the moment, there's been a lot of announcements of piecemeal sort of stimulatory measures. But what the market is looking is for the government to actually spend a little bit of money to reinvigorate this recovery that is losing momentum.